Question 1. Why does credit feel so intimidating to first-time home buyers?
Credit feels intimidating because most people were never taught how it actually works. Buyers grow up hearing vague warnings like, "Don't ruin your credit," or "You need good credit to buy a house," but no one explains why or how those decisions affect real outcomes. So credit becomes this mysterious number that feels powerful but unclear. As a result, many buyers assume one late payment ruined everything. Their score must be perfect. They should wait years before even trying. As Dwayne Buziak, one of the first things I tell buyers is this: credit is not a pass or fail test. It's a system. And systems can be understood, improved, and planned around. Once buyers understand how credit really works, the fear disappears.
Question 2. What is a credit score actually measuring?
A credit score is not a judgment of who you are, it's a prediction model. Lenders use credit scores to estimate how likely someone is to repay a loan based on past behavior. That's it. The score looks at patterns, not perfection. It answers questions like, do you pay obligations on time? How much credit do you use compared to what's available? How long have you managed credit? How often do you apply for new credit? It does not measure how smart you are, how hard you work, how responsible you feel. Understanding that distinction is empowering.
Question 3. What are the main factors that make up a credit score?
While scoring models vary slightly, most credit scores are influenced by 5 core factors. First is payment history. This is the most important factor. Paying on time consistently matters more than almost anything else. Second is credit utilization. This refers to how much of your available credit you're using. High balances relative to limits can lower scores, even if you never miss a payment. Third is length of credit history. Longer history shows stability. This is why closing old accounts can sometimes hurt. Fourth is credit mix. A combination of revolving accounts and installment loans helps show balanced credit use. Fifth is new credit inquiries. Applying for too much credit too quickly can signal risk. Once buyers see these pieces clearly, credit becomes manageable instead of mysterious.
Question 4. Is a high credit score always required to buy a home?
No, and this is one of the biggest misconceptions in real estate. Many buyers successfully purchase homes with scores that are far from perfect. Different loan programs allow different levels of flexibility. Some programs focus more on payment history than score. Others allow lower scores with compensating factors. Some reward strong income or savings instead. The right question isn't, is my credit good enough? The right question is, what programs fit my current credit profile? As Dwayne Buziak, I focus on solutions, not labels. Question 5. Why do buyers with similar scores sometimes get different loan options? Because credit score is only one piece of the picture. 2 buyers with the same score can have very different debt levels, payment histories, account structures, income stability. Lenders don't just read the number, they read the story behind it. That's why improving how your credit is structured can be just as important as improving the score itself.
Question 5. Why do buyers with similar scores sometimes get different loan options?
Because credit score is only one piece of the picture. 2 buyers with the same score can have very different debt levels, payment histories, account structures, income stability. Lenders don't just read the number, they read the story behind it. That's why improving how your credit is structured can be just as important as improving the score itself.
Question 6. What are common credit mistakes first-time buyers make without realizing it?
Many mistakes happen with good intentions. Some of the most common include paying off old accounts and closing them, maxing out cards to cover expenses before applying, opening new credit right before pre-approval, ignoring small balances because payments feel manageable. Each of these actions can impact scores more than buyers expect. The key is timing. What helps credit long-term can hurt it short-term, and vice versa. That's why guidance matters.
Question 7. How quickly can credit realistically improve?
This surprises many buyers. Credit improvement doesn't always take years. In many cases, 30 to 60 days can show meaningful changes. Paying balances down can boost scores quickly. Correcting reporting errors can create immediate improvement. The key is focusing on the right actions, not random fixes. As Dwayne Buziak, I help buyers prioritize moves that actually matter for mortgage qualification, not generic advice that wastes time.
Question 8. Should buyers stop using credit entirely before buying a home?
No, and stopping completely can sometimes backfire. Credit scoring models reward responsible usage, not inactivity. The goal isn't zero activity, it's controlled activity. That means keeping balances low, paying on time, avoiding unnecessary new accounts. Balance is more effective than avoidance.
Question 9. How do lenders view past credit issues like late payments or collections?
Past issues don't automatically disqualify buyers. What lenders really look for is pattern and recovery. A mistake years ago followed by consistent improvement tells a positive story. Life happens. Medical issues happen. Job transitions happen. What matters is how buyers respond afterward. This is where storytelling within the application becomes important.
Question 10. Why is it risky to self-fix credit without guidance?
Many buyers try to fix credit based on internet advice. Unfortunately, generic advice doesn't consider mortgage-specific scoring models, loan program timing, short-term versus long-term impact. Actions that seem smart can delay approval if done at the wrong time. As Dwayne Buziak, my role is to guide buyers so they don't accidentally work against themselves.
Question 11. How should first-time buyers think about credit emotionally?
Credit should be viewed as a tool, not a verdict. It's adjustable, it's improvable, it's manageable. Buyers who remove emotion from credit make better decisions. Once you understand the system, it stops controlling you. If this episode taught you one thing, let it be this. You don't need perfect credit, you need prepared credit. Before shopping for a home, understand your profile. Avoid unnecessary changes. Get guidance early. If you want help reviewing your credit and building a clear plan forward, I'm here. 804-212-8663 Dwayne at coastml.com. My name is Dwayne Buziak, and this series exists to help first-time buyers move forward with clarity, confidence, and strategy, not fear. In the next episode, we'll break down loan programs, FHA, VA, and conventional, and how buyers choose the right one without guesswork.